Many a times you notice when you get your directional bias correct, that is, you getting your directional bias to knowing if you want to buy or if you want to sell, you find it very difficult to knowing the exact place to enter your buy position or the exact place to enter your sell position. And that is what I'm going to cover up in today's video. So today's video, I'm going to make reference or explain better on area of interest 2.0, which has to do with where you can enter your buy position or where you can enter your sell position. So do well to watch the video to the very end so that you can have more better understanding about the exact place to enter your buy position and also the exact place to enter your sell position. Now let's go to class. Welcome back to class. So this is area of interest 2.0. Also note that area of interest can also be called zones. So like I earlier said in area of interest 1.0, zones are places where you look towards buying or selling in the market. That is, they are the interactions between buyers and sellers. Zones are the interaction between the buyer's participants and the seller's participants in the market. And you should also take note of the fact that zones are simply areas where you look towards buying or areas where you look towards selling. That is, they take care of anything called the where in trading. The where in trading. So you can link the where as zones. The where as zone. That is, after you have identified your directional bias, you have identified that, okay, you want to look towards buying or you want to look towards selling. The next thing is, where do you want to take a buy or where do you want to take a sell from? That is where zones come in. For instance, let's say I have something like this. And let's say this is the supply that is going to cause a reversal. What is supply? Supply are simply selling pressure areas. That is, areas where you look towards selling. So let's say price enters inside the supply, and then we are now anticipating a drop to come and take out this external low to the downside. Now, where do you enter the trade from? Let's say you came to the market and this is where price is at the moment, this area. Now, where do you enter the trade from? That is where zones come in. If you don't know the right place to activate your buy, or you don't know the right place to activate your sell, then just be rest assured that even though your directional bias is correct, two things will happen to you. You either become the early buyers in the market, that is, price will most likely stop you out before going your direction, or when you get your zone wrong, then definitely you are going to hit stop loss, right? So it is important that you know areas to enter your trade, and that is what I'm going to cover up in today's class. So in today's class, I'm going to give reference to 4 types of zone. That is, area of interest 2.0 will cover 4 types of zone, and the 4 types of zone that we have here are simply called the rally-based rally, the drop-based drop, the drop-based rally, and the rally-based drop. Rally-based rally, rally-based drop, drop-based drop, and drop-based. This is meant to be drop. Okay, this is drop-based rally. So these are the 4 types of bases that I'm going to cover up today. Now, let's start with rally-based rally. Now, rally-based rally is a type of base that is used for what? Buyers. That is, this is the type of base that all buyers participants always want to use when they want to enter their buy positions. So also note that base is simply your main area of interest. Base are simply your what? Your main area of interest. That is, base is equals to the place of execution. That is, they are what? Execution areas in the market. All bases are simply execution areas in the market. And using this example, which is the rally-based rally, this base here, it is indirectly telling you that this is the execution point. So this is where you want to enter your buy position from. Remember, I said that there are some bases that favor the effect of buyers, and there are also some bases that favor the effect of sellers. So this first one favors the effect of buyers. So I'm going to put the X there. Okay, I'll represent buyers with letter B. Okay, and I'll represent sellers with S. So this is for buyers. This also is for buyers. Drop base rally. This is for buyers. Why? That is 1 and 4, they are for buyers. Then 2 and 3 are for sellers. 2 and 3 are for sellers. So I'm representing sellers with S and buyers with B. Alright, so take note of this. So as I was saying earlier on, that your bases are places where you want to look towards buying. Then your I said your bases are places where you want to look towards buying or selling in the market. So this first one, rally base rally, it means that I'm looking towards buying at this area. So anything that makes price to come down to this area, it means that I can anticipate buys to the upside. This is for sellers, a supply area. This is a demand area, buying pressure area, supply, selling pressure area. So this second example here, this is a rally base drop. This is rally base drop. This is rally base drop. This is favoring the effect of what? Of sellers. So it means that if I want to sell, let's say price pulls back down. That means I want to sell at what? At the base area. Okay, I want to sell at the what? At the base area. Then this other one here, drop base drop. I want to sell at the base area. Then drop base rally. I want to buy at the what? At the base area. So always take your buy or your sell at the base area, meaning that the base are what? Your true area of interest in the market. Okay, so this area here can be called the first candle, which I can label candle 1, or you can call it the lagging candle. This is the base, or I can call it candle 2, which is my true base. Then this is candle 3, which I can call my leg out candle, which is candle 3. So this is how you can choose the right base in the market. So once you've identified your directional bias, you are selling or you are buying, the next thing you need to do is go to that particular time frame of reference that you want to use to pick your zone, and then you mark out the zone in relation to it, making use of these 4 types of bases that I've been given to you. Depending on the direction of the market, that is either buyers or sellers, all you have to do is go to that time frame and pick the defined base, and then you are good to go. Okay, so now I will show some examples now so you can have more better understanding on it. So let's go to the charts now. So this is S&P 500. This is S&P 500, which is also known as S&P 500. Okay, so let's now check where price reacted from this buy that caused this bullish movement here. Let's see the base that caused this impulsive movement to the market. You can see that price projected to the upside. You can see the bullish movement to the upside. So let us check the exact base that led to this bullish movement. So what we have to do now is I'll go to daily time frame. Later on in subsequent videos, I'm going to teach you how to know the exact time frame to go to, so that you can have more better understanding on the exact zone to use for what? For your buying or selling position. So that will be in subsequent videos. So make sure, if you have watched the video up to this point, make sure you like, share, and also subscribe to the YouTube channel so you can get notified when I drop my next video. So let's continue. Right here, you can see we have this first candle is what? The rally candle, and this other candles here, which are 1, 2, they are what? They are your base. Okay, I can say rally base 1, 2, 3, and this one is my what? Rally. So my base candle is what? Is this all these candles here? this intermediate candle here, these are my bases. So this is my rally, which is the leg in candle, base, and what? Leg out candle. Candle 1, candle 2, and candle 3. So let me label it there so you can have more better understanding on that. This is candle 1. This base here is my candle 2. Then the one above is my what? My candle 3. My candle 3. Now also take note that bases or base could be more than one candle. I know in the previous example I gave just one candle, but also note that your bases could be more than one candles, or could be 2 candles, 3 candles, depending on how price is forming at that particular period of time. But the lesser the numbers of candles, the stronger the base at that particular point in time. All right, so this is the rally, this is the base, and these are what? Rally bases. Okay, so all I need to do now is to drag it to the what? To the right hand side. And considering the fact that I am potentially bullish at this particular period of time, maybe to target a particular liquidity formed around this right hand side. So let's assume that this is the liquidity, because of course this was the liquidity calling price. Okay, this area where my line is at was a liquidity calling price. So where would I take my trade from? For my base, right? For my base area. So it means that this is the zone of activation. Okay, this is my zone of what? My zone of activation, which is acting as my what? My demand area, which in turn means my buying pressure area. Okay, my buying pressure area. You can see how price respected the base perfectly well, and then we had a bullish movement to the upside. Now, take a look at this. What is causing this intraday sell that we are seeing on Nasdaq? Where is price reacting from? You can see that this is also a base. You have a drop. This first candle here is a drop. This is the what? The base, and this is another drop. So this is another example. Okay, you can see very, very beautiful. You can see very beautiful. You can see how price is respecting it perfectly well. So let me zoom in. You can see that. So this is a drop. This is the base, and this is another what? Another drop. And you can see that this particular base, we just have one single candle. This previous one, we had 3 bases. 1, 2, 3. For this other one, we just have one base. And you can see that is what is currently causing this pullback that is happening in SP500. So this is a very, very beautiful example on bases. But let me show you more examples so that you can have more better understanding on how bases work. So let's go to Euro USD and let me show you more examples. This is Euro USD. Let me go to the 1 week time frame. Now, using the 1 week time frame, let's check this buy that led to this high. This was a low. This low is what led to this high over here. All right, this is the originator of what led to this high. Yes, I know this also led to the high. Yeah, all right, but this is more like the originator of the move from here to here. So let's say that I am picking this structure range from this low to this high. So I'll label the structure range so that you can have more better understanding. So this is structure range A, and this is structure range B. Now, for those that don't know what is a structure range is simply the distance between 2 points. So this is point A and point B. Now let's now check what base did the price react from to cause this impulsive high. That is, what base the price react from to cause this higher high that was formed around this area. Look to your left hand side. All right, look to your left hand side. Always remember that we are trading based on information that is given to us around the left hand side in relation to the right hand side. So the right hand side is more like the future price action of what will most likely happen in that particular asset that you are making reference to. All right, so using this as a case study, you can see that this is a rally, this is a base, and these are rallies. Okay, so base, rally 1, candle 1, base, candle 2, and series of candle 3. Right, so where the price reacts from this particular base. So this particular base becomes the exact area of interest. As you can see, this becomes the exact area of interest, and that is what led price to creating this high over here. Now take a look at this one. Take a look at this area. What made price to come lower here? Let's check it out. This is a rally, this is a base, and these are what? Drop. Rally, base, drop. So it means that the exact base that caused that sell is this. You can see it's that area. So this is base, this is base. You can see that I'm combining all the type of base that I highlighted for you guys. So you just have to check out the exact base that is given to you based on the direction that price gives you, right? So if it's a bullish, bias, then all you have to do is to check for either rally base rally, which you can see here. If it's a bearish direction, then you check for a bearish type of base that will favor your directional bias. And you can see this is what price reacted from, this base area, and then we had a beautiful drop to the downside. Now come and see, this is the current price action at present. Where did price react from? This sell that you are seeing currently in Euro USD, this sell that you are seeing currently in Euro USD, where is it reacting from? From the base area. Where is the base? This is drop. This candle here, 1. This is candle 1. This is candle 1, which is your legging candle. This 1, 2 are your bases. Okay? 1, 2 are your bases, meaning that these areas becomes what? Candle 2, which is what? My base. And this last one here is candle 3, which is the what? The leg out candle, which you are seeing here, or yeah, candle 3. So let me now mark the exact base. This is the base. Boom. This area is the base. This is the base. So it means that 1 and 2 are the bases, meaning this is what price is going to react from to create whatever low or take out whatever liquidity that price wants to take out. And you can see that is where this this particular candle came to mitigate, and then we had a bearish movement to the downside. All right, so let's go to 1 hour time frame so you can see more structures on that. So this is 1 hour time frame. You can see that now 1 hour time frame is a subset of 1 week time frame, meaning that in 1 hour time frame we are going to see so many candles formed. Right, so you see it, everything here is candle 2, which is what your base, and this is what this particular pullback came to mitigate, and then we had the drop to the downside. So this is a very beautiful class on area of interest or zone 2.0, and I hope with this you should be able to mark out the exact place of activation when you want to buy or when you want to sell. And always note that you need to get a directional bias first, okay? So that once you've got a directional bias, then the next thing is to mark the zone in relation to that particular directional bias that has been given to you. You do that, you practice as much as possible, then of course you are going to get better understanding on zones. And also you can also drop your questions in the comment section. I'm going to answer all your questions. If you like to ask questions based on anything that is related to this video, just drop it in the comment section and I'm going to reply you as fast as possible. So do well to subscribe to the YouTube channel, and see you guys in the next video. So guys, I hope you've learned a lot about area of interest 2.0. So this is very, very important if you want to seek consistency in the market. All you have to do right now is to watch this video as many times as possible, ask your questions, subscribe to the YouTube channel, and of course I'm going to respond to your questions in the comment section. So watch out for area of interest 3.0. Make sure you turn on your notification button, and I'm going to see you in the next video. Take care.